Hey, Nicholas. Hey, thanks for the spreadsheet. I've been reviewing it, and obviously, a yeah, I must say, we found certain pairs that we should not be doing. So I have moved a losing pair from the right hand side to the from the left hand side to the right hand side. So these are all the losing pair, and somehow I noticed that is to do with yen pair. You know, dollar yen, pound yen, and we have this. The worst pair is dollar cat. Wow. And we see we have another cat, Aussie cat, which is also a -1, a loser. So I'm not sure if it's not sure if it is issue with cat, or is issue with specifically to do with cat or to do with yen. uh okay. Basically, I've calculated the risk and reward. Okay, I put in the formula, I calculated the risk and reward. If we sum up all this yellow number is just the sum of the risk and reward for each pair, right? So this 1.57 is just the sum of this is 1.575922. Okay, so the sum of this is 1.88. Okay, the risk and reward, RR stands for risk and reward. So I've calculated the risk and reward. Our strategy is when price hit TP1, we close half of the position. And that's why you see there is a 0.5 here. Okay. So for example, in this example, if you notice, what I was doing in this formula is I wrote if H6 is 0, H6 is this guy, TP1. If TP1 is 0, means this is a losing trade. Okay, then I just put -1 here, right? Like in this row. If TP1 is 0, means this is a losing trade. Did not even get to TP1, so it's -1. Okay. And then now if it's not 0, then the following equation kicks in. If it's not 0, then I check whether TP2 is 0 or not. Okay. If TP2 is 0, then all we need to do is just do a 0.5 times the difference between TP1 and entry divided by the difference between stop loss and entry. That gives 0.348522. Yeah, if TP2 is 0. Yeah, because we just ignore TP2. We don't make any money on TP2. So it's only 0.5. Now, if TP2 is not 0, then we need to have two 0.5. 0.5 of TP1 minus the entry plus 0.5 of TP2 minus the entry divided by the stop loss minus the entry, which is this last formula here. So at the end of the day, we got let's see, sum all of these up for now. So we get 23 hours. What does that mean? What does that mean? That means if we risk 1% of our account on each trade, at the end of so many trades, which is 98 trades, our account will grow 23.63%. That's what it means. If we risk 1% per trade, okay, which means if we risk, let's say, $1 on each trade, so at the end of making all these trades, our account will gain $23.63. That's what it means. If we risk 1 million at the end per trade, at the end of this period, our account will become, if we risk 1 million per trade, okay, our account will earn 23.63 million. So that's what it means. Yeah. Of course, this doesn't look that impressive, okay? Because if you think about it, we only looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 winning pairs. And if we don't do the losing pair, okay, means we are not going to do this pair, okay, because there are data showing that they are losing money. This method doesn't work there. I don't know why, but we can find out why, and the way to find out why is to do a few more. Okay, I think we ought to do a few more, just to find out exactly why dollar yen is losing, why pound yen is losing. Is it because of yen? Is it because of cat? Like here, is it because of cat? Okay. So and also the other thing is we have not done any on index, on stock index. So I mean, this doesn't look impressive because the number of pairs 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10, okay, it's 10 pairs. You get 23, but in our broker we can trade hundreds of pairs. Do you know what I'm saying? So let's say if we have if we can find not just 10 pairs, if we can find, let's say, another 20 pairs which are profitable, so let's say we find 30 pairs that are profitable, and so this could mean this is times 3 if we trade 30 pairs. Okay, this means at the end of this period, if we risk $1 on each trade, at the end of this period we will make $70. If we risk $2, we will make $140, which is not bad. I mean, it's better than putting your money into a bank account. Sorry, in the fixed deposit, right? It's not bad at all. So I think to really make this method worthwhile, yeah, we probably have to test a few more pairs, really. At the end of the day, you want to trade this method. I mean, it's your money, yeah. So before you risk your money, don't you want to know more? Because you don't want to risk your money on this pair. This pair has shown you that they are losing money. So definitely, I mean, when you look at dollar cat, I mean, next time, I mean, you don't want to risk your money there. It's your money, yeah. When you play with your real money, I mean, you're gonna lose this money. Okay, it's not pleasant. So if you want to trade this method, I would say that, yeah, we should do more. I would suggest, just to find out, is it because of yen pair? I would suggest that we do we just do Aussie Japanese yen, for example, because I noticed that Aussie dollar is doing quite well. Aussie dollar is a winning pair. So we have a few dollars that are winning. So dollars might not be a problem. Dollar is winning here, is winning here. Dollar is winning here. Dollar is winning here. I mean, even though it's not so good, okay, but it's winning here. So dollar is not really a problem. Dollar is not a problem. I was just wondering, is yen is a problem? Okay, so we picked a winning, like this, and we pair it with the worst, with a yen, and see what happened. Aussie yen. And then to find out cat, let's do Aussie yen, and let's do a cat yen. Okay, worst against worst, so bad against bad, but in combination maybe they will give us some surprise. And then for index, we just need to do 2 DAX, and let's do Nasdaq. Nasdaq. On the VT market, the symbol for Nasdaq is let's see, the symbol for DAX. This is DAX 30, and Nasdaq is NAS 100. Yeah, and this, I'm not happy with shift as well. Shift. Let's do a shift then. But what should we pair shift with? Pound is giving a good pound Aussie. You see, pound is doing well. Like pound dollar is good. Aussie dollar is good. So pound Aussie is like it's doing quite okay. Dollar shift is bad. What should we pair shift with? Euro shift or pound shift? Pound seems to be doing okay, right? Pound. Cat. Oh, since pound is doing okay, let's do this then. Pound. Let's do GBP cat. See pound cat. And see what happens. And just to just find out that shift. What should we do? Pick a shift. I don't know which one to pick. Euro shift. It's probably a bad pair. So pound shift is probably Euro shift is probably a bad pair. Aussie shift. We have a pound here. We have enough euro. Okay, then. I think Aussie shift. I think that's it then. Yeah, we look at this, we check this, and then what I'm saying is that you, being the trader, if you're going to trade this method, okay, before you trade any pair, let's say you see something that you want to trade, you better be doing this. Let's say, personally for me, okay, if I'm going to trade this method on pound Aussie, I would do this for pound Aussie because it's my own money. I don't feel safe. I would never feel safe just risking my own money on something that I have not yet tested. So it's not that it's like when we ask you to do certain things, things like this on backtest, it should not be like look at it from your own perspective. Like you as a trader, you should not be asking me, for example, okay, hey, is this enough? Because I'm going to turn that question back to you. I will say, you as a trader, do you feel comfortable when you see a signal on Aussie Japanese, okay, on Aussie yen, when you see a signal there, do you feel comfortable risking your own money on that signal if you have not yet done any backtest on that pair? Yeah, that is the question that you need to ask yourself. Every trader should be thinking like that. Okay, so yeah, don't look at this as a burden, because all of these at the end of the day is going to help you to make money at the end of the day. This kind of work is not going to go wasted. Okay, it gives you the confidence. Like, for example, New Zealand dollars, for example, right? You may encounter in this period, you may encounter 3 straight losses, loss, and you'll be scratching your head and you'll be cursing. So what on earth? How can this be giving me 3 losses? But this back test is showing you that you can have 3 consecutive losses. Okay, but if you then quit immediately, if you don't trade this pair, if you don't have this data, you don't take this pair anymore, right? You quit this pair. The next trade is giving you a winner. The next trade is giving you a winner. The next trade is giving you will be missing out on the winners. So backtest is very, very important. Like here, pound Aussie, it's making money in the long run, right? It's giving you 4.2R, but it can have 2 consecutive loser. So you may have a loss, and then you will start cursing yourself. But with this data, it's showing you this can happen. But as long as you continue continue doing this, continue executing this strategy, you are going to make money. Right? So that's the whole point about doing this back test, to see, like this Euro Aussie, 3 straight losses. Wow. You know, so it can happen. It's 2 straight losses, it can happen. But the important thing is that, you know, when you experience 3 straight losses, you need to go back to this data and you check. You say, oh yeah, I've seen 3 straight losses. It's not really you know, I should not be surprised. I should not be surprised by this. And then when there's a signal, the next signal, when you see it, take it, because that signal, yeah, most likely is going to give you a winner to make some of this money back. So backtesting is very, very important, very, very important. I cannot stress how important it is. And yeah, I think for now let's do this, okay? And we will have a lot more back testing to do for our new method, but I have done back testing on those, so I can give you some of those data, okay? I'm still working on those, so yeah, I'll suggest that you at least you try to do this, because I'm curious to find out why yen pair is doing so bad on this method, you know. Okay, let me send you this. Let me pause this video now. I'll send you this spreadsheet. Okay, ciao.